Alrighty, Doc here from North America. It is TGIF, and good morning, good afternoon, and good evening. All right, let's see what we got going on this morning. You can see there, to start off with, the dollar is dropping down a little bit. You know, it's doing that sideways thing that we've talked about. You can see there on the Chicago quant chart right there, and it's backing off nicely. We're heading back down again. Figured that we were going to go visit this lower end of the range. We keep on thinking we're going to do it. Every time it hits the high end of the range, we assume it's going to go back to the low end of the range. And you can see it over here on J4X, same situation. You can see it moving away. The white line is trying to pierce the dashed line as we speak, our Manhattan indication and or indicators. And basically, that's the pressure we're seeing at the moment. I know I did look around this morning when we sent charts out to our clients that I saw the the cable looking firm. I think it was above the euro. Same situation. There's some simple buying going on. There's a lot of noise at the moment overall. We've got an enormous option expiration going on today. $3 trillion, not billion, not million, trillion. I think it's 3.1 trillion to be exact. There's a lot of binaries and options deep in the money, and they're going to have to expire. And deep in the money positions like that are basically longs. And so, what we really see is the answer to it in the end result is that those assets have to be bought again. So maybe they're selling them down. You like to take them down and take them up. I don't think that the markets are going anywhere but sideways. Sideways to down. That's what I think I have a cough. Excuse me for a second. Oh, tea went down the wrong way there. I don't think the stock markets are going to be crushed, not like back in February of 2020. I think there's just a lot of leaking going on at this point, a lot of leaking on the downside. Readjusting of earnings, due to inflation, just all the basic mechanics that have influence on the market in general. So that's where we're at with that. That's what we're thinking about, and how it plays itself out. And then when you look up and you see the Swiss moving down like that, it's just par for the course. Oh, let me tune into the chat line. Make sure someone is not saying, "Hey, Doc, where are you? I want to say something." Let's check it out. There we go. And just turn that on. Oh, there we go. Yeah, we do. COVID. Marcelo says COVID. Marcelo, COVID. Yes. Was it they've removed COVID out of England, right? There is no more COVID. All gone. No masks, no shots, no lockdowns. They're joining, I guess, Sweden, so forth. In the end result, the COVID is just another flu. That's all it ever was. It's an aggressive flu. How many times have we seen that? I don't know if we really see the true death rate of it. We'll find that out over time. In other words, if you're riding your motorcycle, you get into an accident, you die, you were registered as dying of COVID, not as dying of a motorcycle accident. So, this is the dilemma we've had with this whole event. A lot of parties like party like COVID parties. People kind of, was it? You mean they're locked in, so they have parties? Is that what you're saying? That kind of makes some sense in some ways. There's terror on others. You see the combination of it all. In the UK, yeah. They're it's over with now. It's all done. No more masks. No more injections. No more lockdowns. No more passports. It's ended. They just declared it gone. Oh, how nice. So that's the answer to it all, and we're real happy about that. We're glad to see it play itself out like that. All right, let's see, where do we go from here? Buy the dip in sheep's clothing. I just got that from an old trader. Just came in as a text. Buy the dips in sheep's clothing. I'm responding and saying yes. Yep, dollar cost averaging. AVG, dollar cost average. Indeed. So, oh, Boris Johnson, yeah. I mean, look, no more than what, 2 weeks ago, they just wanted to lynch him, right? He was trying to pass all this stuff. The science is just not there. That's the problem. I mean, the medical science is not there. The data doesn't show all this paranoia. There's no death rate to Omicron. It's the opposite. It's the tail end of it all. But over here in the States, they're going to keep on pushing it until they can't push it anymore. Yeah. So Boris is getting basically what he needs is that he's going to show that he's closing it down, stopping it, calling it quits. Let's not do this crazy anymore, right? That's pretty much where he's at the moment. And I don't blame him. And that is really what it comes down to, too. If the science had been there, I would be right there with it. I had, biology 1 and 2 and 3 and organic chemistry and biophysics 1 and 2 and physiology 1 and 2. I was a pre-med person. It's just not, the science is just not confirming it. The medicine's not confirming it. We have, they put a post out that says something like 270 doctors does this, and they find out that only out of the 270 signatures, only 10 are doctors. So it's not 270, it's 10 doctors. It's like that's the whole crazy issue of this situation, and it just doesn't seem to be any way of stopping it. So that is what we see. Let's see. Let's go over to. Let's check out the euro this morning. Right there, you see the euro doing its little bounce up on there. Let's also move it to the Chicago quant chart. You can see it right there. We are through the plus side now. We got a green candle going, or it's an up candle, and that's got not much to do with it, but it just shows you that it's up. In this case here's all the math right there, and it's in a weekly buy. So, as far as I can tell, the one thing you don't want to do is try to short this market at the moment. Instead, it seems to be telling us that the firmness is there and everything else is there, and and that's really what it comes down to. Indeed, indeed. So, we're looking at these markets, and you have 3 trillion in options expiring today. So that's the thing that's making the noise, as far as I'm concerned, all week long. That has probably had an enormous influence, I don't see it changing any other way but that. That's a lot of long. In other words, they're long, and so they expire, and the stock gets called away, or whatever the position is gets called away by the longs, and I think that they may hedge it a little bit by selling some stuff against it, but overall they're long. That's what it really comes down to. They probably have already hedged it. I would assume most of it is hedged already. Seeing a quote there. Interesting. So from there, because I don't see any questions, let's jump over to the cable and see how Mr. and Mrs. Cable are doing. Let's see. Right there. And you can see there's the cable. Now that's a little weaker this morning. We're a little surprised by that because it seemed to be holding pretty well on this 0.38 here on the right there. So we were, there's the 3.8 hanging right underneath it. You see it's bouncing up. Let's see what it's doing on J4X. Right there, it's down, oversold. You can see that way down. Trying to get back up. We'll see. I mean, it has been a pretty positive move. Was outperforming the euro. So maybe it's like an engine. When one piston goes up, another piston goes down, but they're all moving in the same direction. And so maybe what we're going to see is, this will be a little digestion, and then maybe the cable will get rolling along again. I would have to believe now that they've moved into the very positive side of medicine and society that the cable, maybe that's what that was to begin with. Maybe that bounce wasn't anticipated. You know how the old saying, buy the rumor, sell the news? They passed the the idea of there is no more lockdowns, no more COVID passports, no more injections, no more masks. And maybe that's what the rally was all about. And we'll see how long this holds on for. So that's could be the, in other words, now they're looking at CPI and PPI and earnings, all the, and inflation, looking at all these things. They raised rates. They've started already raising rates, which is a very positive thing. So, we'll just sit back and watch and see how this all plays out. And I imagine when the Federal Reserve starts to raise the rate again, they'll raise the rate again. I don't think they'll drag their feet. All right, from there, we march our way over to one of the greatest scientific experiments seen in an industrial nation in a very, very, very long time, and that is the Turkish economy, and how President and former Prime Minister Erdogan has basically guided this economic situation and seems to have made the right turn. Let's take a look at it first through the dollar Turkish lira right there. Things are looking kind of positive. Right there's the Turkish lira, and you can see they flatlined this thing. They gave out, right here they declared that they were giving out free puts for any long in Turkish lira. And it stabilized after a week and a half, 2 weeks. And look at it, it's calmed down dramatically, just dramatically, from 18 area all the way down. Now we're just 13.40. That's a 1/3 retracement, which is very impressive. You can see here we're flirting with the weekly sell. Looks like it will go into that weekly sell. And then what we do is we like to really look at it through the eyes of the euro itself, right there. Location, location, location. And same situation. That was the declaration that they're giving out puts for anybody long Turkish lira. So I buy Turkish lira and I can get a free put at the same time. And then you can see it went back into the sell there. And the line is not in there. There it is. And let's widen this a little bit more. I guess what we'll do is we'll do this. We'll recycle the basis like that, I guess, and then widen it. And then we can widen it out like now. There we are. So you see here, really close. You can see it's still minus by, what's that, minus 0.03. And we're going into a weekly sell. And this is starting to look like they want to retrace to these lows somewhere in here. I'd imagine in this area like that. So underneath 13 when it comes to the euro Turkish lira. And right now it's trading at 15.21, coming down from 21. So it's been a very impressive move. I'm liking this concept. The more I see it, in the beginning I said the Llanos, I didn't think it was going to be that successful, but the more I think about it, as a hedge trader and a derivatives trader, I'm trying to figure out how do you benefit from it. And obviously, I guess the best way to benefit from it is buying the Turkish lira. So I thought for sure they would be laughing this off and going, yeah, they're going to raise taxes on the population just to pay for the put. But you know what? If people are holding the currency and not speculating that it's, and it chills out the inflation because it wasn't super hyperinflation going on there, going from 1.5 to 20.5 in the euro pairs trade to the Turkish lira. Now it's stalled out and it's quiet. If we see this for a couple more months, this could be the very beginning of a very solid strategy that could help the South American countries when they have to go bankrupt and so forth. When things are getting out of hand, this could be the real recipe for countries like that. Where they're relatively industrial, established, but just irresponsibly managed. This could be a strategy, and Turkey has been looking at this strategy since mid 2018. So they almost implemented it in the 6 area, and then had to get it all the way up to 18 before they did something about it. So we find this to be very fascinating, and I know I mention it here all the time. And Turkey is a OEDC, is it organization organization of, or is it a country? What do they call it? The OEDC. It's the was it EO, Economic Economic Organization of Developed Countries. So it's OEDC. There's 35 of them in the world. The United States is one of them. Great Britain is one of them. There's 33 others, and Turkey is one of them. So this is a very small club, and it's very interesting to see something like this play out in it. That's why we've been paying attention. What's this? Marcel says, "What is your trading time frame on Doc on your charts?" We go through here. What we're doing is we're doing dailies. This is dailies. So we look at this. The gas line 3 indicator, my proprietary indicator. This is a daily right here, looking at this chart right there, and this is the weekly, looking at only the week, the close of each week. And so you can see here, we were in a long from all the way back. Let's see if we can tighten it up a little bit more for you. Let's do it this way too. This is where it went long on a weekly basis, a weekly trend. We look at the weekly trend and we look at the daily trend. And so that's what that is. And then what we used to do years ago is we would show you intraday trends. Say we'd have a camera on the euro watching the way it traded for the day. And like here's the euro on a 9,000 tick. And 9,000, what do we call 9,369 Tesla. So it's like, basically it's, what's it, 100 time Tesla. That's what that is. So you can see here, and we'll show you, our math goes into a cell right here because the white line in the histogram are minus. And then this is the Manhattan one indicator that we pay attention to on the bottom of the J4X right there. We put that on there, showing you how successful this whole concept is following our work, the Chicago quant work. And so it goes into a daily cell there, and you can see the value goes down over that period of time, and that's like a whole day there. And this is an intraday, and a lot of times, like you can see, like right here, here is intraday for the S&P 500 right there, or this one right here is the Tech 100. That's the intraday, and you can see this is a 4 Tesla, and you can see it goes into a buy right there. Let's put a little line in it. We used to say if it can work well on an intraday basis, it obviously works well on a daily basis. And you can see we can make this a white line, and we'll make it extend it up, and we can go around showing you the characteristics of it like that. So you can see there is a buy. It only goes up for a couple bars and breaks down again. Goes into a sell right there. It's real choppy at the moment. You can see there's a buy right there. Did the same exact thing and failed. Went into a sell there, and it goes back into the buy right there. 1 bar up. This is pretty choppy in here right now. this is a better one, of course. It's a big winner that takes care of any losses or just small gains in the big choppy ones. There's a buy right there. You see the success of that. That's a little bit more smoothed out. You can see it gets choppy again in here, where it goes into a buy, it goes up, and then starts then back up again. Let's see what that is. Both the 1 and the 4 are minus. You can see that there. There's a buy right there. You can see the action from that. Here's a sell right there. See the action from that. There's a buy right there. It goes into a sell right there, and it goes right back into a buy again, right there. So you can see it's the same mathematics that's on an intraday basis. We can look at it through a couple other products like the Dow Jones Industrial Average. You see the same situation here. Using that. Then we sometimes use a combination of them. Let's minimize that again and go back to the Dukascopy, and you can see here. So when we look at what we were looking at the Turkish lira, right? Let's go and look at the Euro Turkish lira. So let's put that in there on this. And go back to the Turkish lira, or we'll look at any other product you would like to see. We can put it up and you can see the math to it. So you can see here, the weekly trend is getting ready to shift after, what, a third of the year? Went into a weekly buy back in mid-September, and now it looks like, the end of January, it's going to go into a sell. And then what our rule is that when we're in a weekly buy down here, when we go into daily buys, you can be long, but when you get into a daily sell, you don't take the daily sell because we're in a weekly buy. We look at the overall trend. And so you're just trying to trade the overall trends. And the same thing like right there. In this case here, it tells you to be short there, and you don't take the short. You know the weakness is coming, you just don't take it unless you're doing it through derivatives where there's a limited risk. The idea is not to get stopped out. When you're using binaries and options, you don't get stopped out, so you can hold on to a position. Whereas if you're the hard delta, along the spot, that type of thing, you can get stopped out. And how many times have you heard someone say, "Oh, I was long this, I got stopped out, and then guess what? Yesterday it went up." You hear that story all the time. If you have a question, ask them. This is a top quality analysis. Oh, nice, Robin. Way to chime in. I like that. We be top analysis. Between Robin and I, we have almost 100 years of experience of the markets. Robin's been trading so long that he traded eggs. And for you stock indice people, Robin made the first trade in the S&P 500 pit. They were standing around going, okay, what price are we going to price this thing? The day they created the S&P 500 in the futures, Robin was in that trading pit, and they said, well, what price should you trade this at? And everybody's like, I don't know. So the chairman of the exchange was standing in the pit also, said, what do you think, Robin? And he said, yeah, let's trade it at this price. And boom, that's what they did. Why so many indicators is difficult to understand what I'm seeing. Okay, so Oscar, what we're looking at here is now, what you're seeing right now is the daily, let's see, what product, do you have a particular product you like to look at? We can go to it, like the Euro or the GBP or anything. Name it, we'll look at it, and we'll explain to you the indicators. There's only really two overall indicators, okay? So in other words, when you're looking at, like, here's Canadian. Now, this is the weekly down below. These have certain nuances and characteristics, okay? So in other words, when the histogram and the green line are through the plus, they're telling us two different stories, but it's the same subject. So in other words, they both are always going to be plus or minus when it's a gas line 3. When we turn the 5 super on, it's a whole different thing, but it's still basically the concept. And on our website, we have explanations of the indicator. But this is just a weekly indicator right here, and it's showing us characteristics, showing us strength and weakness and trials and tribulations. This one in the middle is the daily, doing the same exact thing, showing us different characteristics. The momentum, you see the dots on the system here, they're showing us characteristics, but overall, we put a line in where the sell comes from, right there. We put a line in there for where the buy goes on a daily, right there. Same thing again. And so there really is just plus and minus in the end. In other words, when it goes minus, it's in a sell. When it goes plus, here on the daily, it's in a buy. I mean, that's really what it comes down to. The rest of it is just nuance. It's like tasting something and knowing if it needs more salt or less salt. Tasting something if it's too strong or too weak. And so all the other parts really are nuances showing us the strengths and the weaknesses. How the white line gets through the purple here, the time manifold. You can see it's a mirror image. It's a characteristic, it's a standard deviation of my mathematics, like the Bollinger Bands. It's a one standard deviation. So it's showing us lots of characteristics, but really you're right. What is the most important thing? Plus or minus. If it goes into a sell, it's in a downtrend. If it goes into a buy, it's an uptrend. How long will it last? That's the magical question of all. Our math will show us characteristics if it starts to weaken quick, but doesn't go into a sell versus when it does, or vice versa. Does that make sense to you, Oscar? So in other words, in the end result is that I guess the most important thing is to look at just if it's plus or minus. Waiting to see if Oscar picks up on that. Does that make sense to him? And so then all the other squigglies are just telling you, is it too warm or is it too cold? Is it taste too strong or is it taste too weak? Is there too much salt or is not enough salt? It's just showing you the strength of the flavor, the strength of the temperature, the strength of the how long. In other words, when you see the white line, like you see it goes into the sell or the back, it goes into a buy here. We have a green dot there, so you can't switch yet, but you can see that it's already dropped. So now you know there's weakness coming in. It confirms the sell right here or the next day with a red dot and then that. It can be blank or it can be a red dot. Either way, it goes into the sell and you can see it's breaking down. Now you see here the line has broken through this time manifold here, that mirror image, and it's telling you how much weakness is there. And then all of a sudden it starts to bounce right there and falls down again. And then you get a nice big bounce out of it, saying to you, okay, the selling has dried up. That's what it's trying to tell us there. And then you can see here, the histogram turns up. We get into a buy. Let's throw a line in there. I think that was Monday. We're not paying attention to that because it was Monday, because of the United States was all closed, and we allowed it to automatically stay into the sell. And then, when the United States is closed, we don't pay attention to the day it's closed that much. And so then what happens is that you can see we're still in the weakness, but now you can see here we got a green dot, and we've got the white line piercing the zero line, the histogram and the white line piercing. So there's strength. Now, if you noticed, when this mirror image, like the standard deviation, becomes very tight, it can be the beginning of a move. Okay, let's see if we can find another one. And look at this. This is really tight. If we scroll over, let's see. You can see here, it got really tight, and then when it finally, and then we go into a weekly buy like here, and the squiggles start to move, and you can see the trend really starts to lift and get going. We get some real action out of it in the sense of a long, continuous trend. So I hope that all explains that there and helps out. But in the end result is if it's plus, then more than likely it's going up in value. The average is 8.5 out of 10 times it's going to be right. And when it goes minus, same situation. It's going to be 8.5 out of 10 times right. And you're talking about trying to predict future course of a moving object from past performance, and to have an 85% to 90% success rate is a pretty high number. And the nuances will get you, let's put it this way, it will warn you not to load up the boat. In other words, don't use all your resources. In other words, be as Robin likes to call it, good money management. Using the right stop, or using binaries, or using options to hedge yourself in the beginning to start off with, when you see the weakness start to evolve, or vice versa, the strength if you're short. And that's how that all works there in the end. All right, where are we at now? I guess so. We're at the Canadian. Let's put the Canadian on the J4X. And then what we did is we developed a couple of indicators here that. Let me find the Canadian here. There's Canadian. You see it on J4X. We use Hinky-Ashi bars to they match up 71% or 68% of the time to our dots, which is a pretty good number. And then we use two moving stochastics competing with each other. So we use a fast moving stochastic versus a slow. We call this the Manhattan indicators. And what it does is these are just public things you can put up on your machine, and follow. When you don't see Doc's webinar and see the numbers here, or you're not on our charts, that type of thing, you can always look through it on J4X or whatever platform you're using to have a good idea what the general flavor or the direction is in a product. And that's what we're shooting for. We're trying to give people the fighting chance to be on the right side of the trade a lot of the time. And you can see on the Manhattan indicators we have as a public indicators, it lags our math, but it's much more accurate than, say, MACD or moving averages or Bollinger Bands. It's way more accurate. And that's what we're trying to really explain here overall, is keep you in the right trend as much as possible. And obviously, that's why we put our charts up there at the same time. Because let's put it this way, if J4X or any other charting mathematics was better than my math, we wouldn't look at my charts. I wouldn't be looking at them. But so far, I've never seen anything better than my work over the last 40 some odd years. So, and you see it live too. And we will, like I said, for years we would do the webinar and we would have an intraday on, say, the NQs or something like that, or not the NQs, I'm sorry, like the euro or the British pound. There would actually be an intraday chart. You could trade the markets live for an hour using our math, watching it. So I hope we've explained that clearly enough. I think we have. I'm glad you responded, Oscar. Thank you very much. All right. From there, let's see. And from there, that's the way we roll. That's pretty much the answer to it all. All right, from the Canadian, what we normally do is we assume that the Canadian is telling us a story. And so what we do is when we see the Canadian going down, showing strength against the dollar, we look at the energy sector, and sometimes we look at the metal sector. So let's take a look at gold. Oil? Let's start off with oil. And we're going to leave the, let's see, what's going on there? Where's Canadian? Oh, yeah, so Canadian is trying to lift. You can see the green hinky lifting up, just like you see right here, our work lifting up. And you can see the lines moving up. Now let's go over to oil. That's Hogs. And there's oil. And you can see we're flirting with the daily sell today. We've also switched over to the March contract from February. Those things expire a month ahead of time, which is really weird. But in the end result is we would normally think when you see Canadian going down against the dollar, that oil will be going up going up in value. And when we see the Canadian here going, oh, you can't see that. When you can see the Canadian here going up right now, and you can see this action here, we would assume oil is going to be going down in value. And that's what we're seeing there right now. And that's why we look at these things. Hey, Marcel, good seeing you. You have a safe and smart weekend. Enjoy yourself. Be careful now. And thank you for stopping in and saying hi. Hi, hi, hi. Howdy. Remember, cowboys never say goodbye. They just say, see you later. All right. And so that's where we are with the Canadian. You can see there's a little firmness going on here. We're a little surprised. And you can see it over in the energy sector doing what it should be doing, and that is obviously going down since Canadian is going up or vice versa. We're not sure who leads who, but in the end result, it's always fascinating to see it. Now let's go over to J4X, no, Chicago Quant again, to match up to the Canadian. And we're in a weekly sell, so you can see the overall trend is down for the last 3 weeks, going on a fourth, and we're getting a little bounce off the 50 percentile. So we've this range that exists for like the last couple of years, we have it Fibonacci'd at the same time just to watch how it works, to see how it bounces off things. And then we watch our math. You can see here the white line started to come off. It's on the 50 percentile. And what is it doing here? It's doing the hesitation on the 50 percentile. As the strength starts to come in, the time manifold starts to tighten. It's telling us that the actual value of the product itself is doing the same exact thing. No, see you later. That's how we look at it as cowboys. We say, see you later. There is no goodbye. Happy trails to you. There we go. All right, let's head over to, from there what we do is we jump over to the South African Rand. But if anybody wants to see anything, just shout it out. We'll go look at it. Because we love to deviate and look at other products in a proactive world. That's our bread and butter at this point. You can see here, South African Rand is challenging yesterday's low, which is about a 2-month low, which is interesting. You can see we're in a weekly sell since in this area here, and it's zigzagged up, went down and up, and now we're really down. And you can see the daily sell right there, pressing more, and it is coming down. So we're thinking that this thing could probably, we talked about it a couple days ago, thinking that it would, being in a weekly selling like that, maybe it would challenge this low in here. Go hit the 15, drop a little underneath it, and hang out a little bit. All right, from there we go to the ruble. Boy, what a lot of mixed messages about the ruble in so many different ways. It's like, oh my God, it's crazy. Let's put that in there again. Why is that red line gone again? There we are. And you can see here we're in the daily sell, and for weeks now we keep on flirting, if you notice, with the zero line, and then it seemed to bounce off of it. We keep on, and this blue line, this is the super. We have the super turned on this one. So the yellow, I'm sorry, the white histogram and the green line is the 3. And the dashed blue is the super 5. So it's a 5 average versus a 3 average of our mathematics. Let's throw it up on there for the ruble. Right there. And we're a little, we know that there's a lot of noise. There's a lot of war talk. What do you call them? War drums being played. A lot of crazy stuff going on. We're not really looking at a lot of economic news on the action of this currency. We're looking more at just literally the geopolitical news. We're a little disappointed with it all. We would rather be looking at economic news and the potential of the value of the currency in the future, and so forth and so on. We always are a big fan of the ruble. We think that the ruble should be in the 30s, maybe the high mid 40s, something like the high 30s, mid 40s, something like that. They have enormous amounts of resources, an educated workforce, and I guess one day when the geopolitical stuff finally does die down, it'll probably be a very good investment. Right now, they're still going through what we would call their Wild West era, where the capitalism is more crony capitalism, and laws are not necessarily always followed, and that's a hindrance to the growth of the country also. But we don't. That doesn't make us less favorable in our hearts, thinking that this country has potential. And we do. We think this country has lots of potential. One of the largest oil producers in the world, some of the most unique minerals in the world, an educated workforce. You know, there's a lot of reasons there why this country has, the Russian Federation in general has a great potential. It does. It just has to clean up its act. That's what the problem is. It still has to clean up its act, economically and by law and so forth. All right, from there we go over to the Japanese yen. The last sip of my tea, it's empty now. Let's see what the yen looks like this morning. Right there, dollar yen. And you see there, in a sell for 2 days now. This is the second day. Let's put the line in there. And you can see the weekly is trying to look. It's broken the time manifold, the green line. It's that's what that thing is all about. You can see the super on this. We're running a super on this too. That's the 5 average versus these are 3 average. That's why there's a lot of mirror image. So you can see the green is a 3 average of our mathematics. The blue is a 5 average of our mathematics. And you can see that it has been breaking down here. It broke that line there. It's going through the minus last week. So there's pressure on the product. We know that. And you can see here this thing is now breaking the time manifold. And now you can see it's going to take a little work to get it into the sell today in this week. But it may do it by the end of the day if there's some pressures on it. Or maybe next week. Maybe it'll be the change of course. We'll see. And that's how we watch this stuff all the time. All right, from there we go to the Mexican peso. Right there. But again, traders, if you see anything you would, if you want to look at a particular product through our eyes, our mathematics, just shout it out. Put it on the chat line. We'll go to it instantly. And there you can see we're seeing some strength here in the Mexican peso against the dollar. Seeing the same action right there. And you can see the weekly is trying to turn up. We're getting very close to the 0 line, but not this week, obviously. It'll be more like, next week if it gets into a weekly buy. So we'll see how that plays out. It has fallen back to the range that it had been trading in for a while. And this was the United States, Canada, and Mexico having a conference, and it just exploded the product up. All right. From there, we pretty much done looking at the currency pairs, and we're basically going to take a look now at the metals complex and the energy complex. And we'll go from there. Unless someone wants to see something. If you see a currency you want to look at, just shout it out. We'll go chase it. All right. From there, we go like this. Let's see. Where's it at? Right there. We'll go over to there's crude oil. And let's take a look at natural gas. Right there. There's natural gas. Natural gas is right there. Let's put it up on J4X. That is U.S. natural gas here. You can see we're trading in the $3 area. And then you have European gas. There's right there. You can see that's trading in the $29 area. It's been ripping through the roof. It was up as high as 31 in euro. Dollar-wise, I think it was 37 or 38. You can see the energies. It's the winter time, so obviously they're going to be more expensive. But here in the States, our energy, we have a lot of natural gas, so our natural gas is down at the moment. We're Mr. Biden has stopped our oil production. He's dramatically dropped our oil production. We were a plus an exporter, but they don't like oil, his political party. So they do seem to be happy with natural gas, though. So that's a good thing. What else can we say about the energies there? I guess that's about it. From there, we go over to the metals complex. Let's see what gold's doing this morning. There's gold. And there's gold there. You see it's down. It's been down today, but it's still in a plus. It's been in a buy since here. We went into the weekly buy here, so it has had a nice little pop. And you can see same situation going on the J4X. Caught that move and it's catching this move, that type of thing. You had your weakness kicking in here with the red hinkies. Let's check out silver. Right there. And let's see what silver looks like over here. There it is right there. Same situation, only even stronger. We've moved from the 23 area since the weekly buy, or 22 and changed, 22.91, to where did we get to yesterday? 24.75. So basically 23 to 24.75, $1.75 up, which is a pretty good move in the product. And you can see it looks like there's going to be no problem with both gold and silver closing in a weekly buy for the week. You see that right there. And the selling seems to be relatively docile. What else can we say about all that? I guess not much more than that. And that's a good thing. I mean, inflation is increasing. So we do have some curiosity why we have not seen, stronger metals complex. And so we kind of, look at it that way. Then let's go over to here. Let's see, where's that? Let's go check out copper. See what the copper's doing. Right there. Copper went into the buy yesterday. You can see right here the slow fast indicator of the Manhattan indicator is moving up. You can see the green hinkies. This combined together gives you a good general idea of the trend. And we'll take a look at our Chicago quant work. Right there. Same situation matching up to the J4X. And you can see we've been in a weekly buy since back here in the last week of December. That put us into the weekly buy, and you can see it's been kind of a sloppy sideways up action. It goes down, goes up higher, makes a new high, beats out these highs, goes down, makes a higher low, and now it's trying to make a challenge to this move that took it to the 460 area. I think it got the 459, was it? 458.60. So it didn't make a new high yet. It's in a buy though, so maybe we'll get some of that over the next couple days. Hey, middle-aged, where you been hiding? Happy New Year to you too. Let's see what May corn looks like. And there is May corn. Where are you, May corn? Right there. There we are. You see they're selling it off a little bit from yesterday, but look at the strength and look how long it's been in a weekly buy. We've been in a weekly buy in that product now since late September. Since the was at the 535 area, 540 area, we were in a weekly buy, and the product has tried to make a new low in here, which it did, and then it gave us a sell signal to protect us, and then went back into the daily buy, and wow, what a nice big winner chicken dinner. So it's gone from basically the 540 area, I guess you could say, to the what's the high there? 617. And there's we're in the 614 yesterday, and today we're at 607. And you see, it doesn't look like there's any, it doesn't look like the weekly's going to be challenged at all. So that's, what is that, a quarter of the year, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8. So 18 weeks. So 3 times 18, 30. So it's a third of the year it's been in a weekly buy. That's pretty good, you know. And let's see what March is doing. There's the March wheat. I'm sorry, March corn. Same situation. It's been in that buy and doesn't seem to, they've tried to knock this stuff down, but it doesn't seem to, do it. And it's on another little winner chicken dinner game again. I've been having to take my son to school, so I've been watching the podcast later in the day. Oh, okay. That's cool. That's very nice. Overall, it's I find the grains and all like that holding up pretty well. They tried to knock them down a couple days. I guess it was like last week. Saw a lot of weakness, and then it seemed to just perk itself back up again. So I'm not, I don't really. Matter of fact, have you seen the animals? Check this out. I mean, it's like, what was it? Is it Hogs? Hogs are, lifting up incredibly high. You can see they're making a challenge to the October highs. It's taking out that high there. And, I mean, we're seeing some interesting action. I mean, it's in a weekly sell here, but it's definitely going to close this week into the buy. Now, check out April. This is what really has my eye, is the April Hogs. What a spiking thing they're doing, too. They're making highs that we have not seen. See that right there? That is wild. Yeah. So, our supply chain stuff in the States here has really got everything upside down. We're seeing it in the cattle, too. You can see April cattle starting to try to perk up. It's in a weekly sell. It's not moving anywhere near the hogs are. And, you can see that. And for currency traders, why do we talk about some of these other products? Gold and silver, oil, and the commodities, is because of quantitative easing. Anything denominated in dollars can become a currency through synthetic derivatives. So in other words, you can let's say you're not in the United States and you're buying cattle. So you buy American cattle. Now you need to buy dollars because in essence you are short dollars. And so if you don't buy those dollars, you're short dollars in a sense. Then you go and put on the options, so you're not really taking the risk of long or short cattle. Instead, you're just taking a currency translation. And so that's why we pay attention to those things. It's something derivative traders are doing to offset not being considered manipulating a currency. That's just the way the whole world spins nowadays with QE and central bank control. All right, let's see, where were we at? Oh yeah, so there's copper. Let's see what platinum's doing. Platinum did show us that there was some interest in the metals complex ahead of everything. We've been in there's platinum. It's been in a weekly buy for the 4 weeks also, from here. And you can see the action. We've gotten back up to the 1,050 area. A little weakness in here today. You can see it. They did it here too. They pushed it and then put it back into the buy there, and you can see the pressure on it. You can see they're flirting with the daily sell there as we speak, right there. But the weekly seems to be holding up, so I kind of think that the metals complex is going to be finding more strength, still on the pursuing weeks until we see our math start to turn. So that's all the metals. Now let's take a look at the. Did we do so? Yeah, we did silver. We did gold. We did copper, and there's platinum. So, and that's why we look at a lot of these products, but we look at them with a different eye. And that is that we're not saying, okay, be long this or be short that. We're saying more of people, there's a problem. The Secretary of Treasury in the United States comes out every quarter and announces who is manipulating their currency and who is not. In this QE world, I have no idea how you would even suggest the idea that you could actually measure who's manipulating. I mean, what wackoness is that? Oh, good. Good. I know you broke even at the 14-15 area, so that's a good thing. Yeah, I'll tell you, in this inflationary world, it's really hard to understand how the metals are not higher. But I've come to a couple of Maya copas, and that one is that it's a long-term tool. You still holding silver? Silver does look like the better of the two. Robin, you still around? Robin probably has a good opinion about that. But it has that double bottom, double finger thing that Robin watches, and he's been saying that he's seeing that strength in there. And sure enough, we've had what a $1.50 move in that compared to just a $30 move or $25 move in gold. So definitely silver is outperforming the gold at the moment. All right, traders. Looks like we're at the end of this adventure. Oh, there's Robin. Yeah. So, it just seems to be the factor. I guess we're going to call it a day. So, for all of you, have a safe and smart weekend. Catch you later. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Ta-ta, traders. Catch you later, middle-aged. What's it? Robin says, does look like a bottom. Yeah. Double bottom play. Exactly, traders. All right, we're out of here. Safe and smart weekend.